What's up people, in this video we're going to talk about the underperformance of WIF and POPCAT over the last couple of months. It's understandable that a lot of people are really concerned about these two coins right now. Is it over for them? Are they going to continue pumping anytime soon? And in this video I'm going to answer both of these questions. Now to start off, we're going to have to look at Bitcoin first, because mostly what happens on Bitcoin will affect how the short term plays out for both of these coins. And immediately we can see that scenario number one that I shared on Monday's video is currently not playing out. And scenario one, by the way, for those of you who didn't watch that video, is a confirmed breakout out of the value area, finding support at the value area high and then pumping straight up from there. Now I did draw a second box right here, and I did say that this would be the ideal level for Bitcoin to come to, and at the moment Bitcoin looks like it's bouncing from that level. Exactly from that level actually. And not only that, but this, by the way, is a confirmed broken base on the daily chart. So this is a really bullish signal. Broken base, by the way, just means a liquidity sweep followed by a strong market structure sweep within the same move, and usually a retrace back into the 50% of the move tends to provide a really high probability entry to get into. And in this case, you can see that we're actually back at the 0.618. So all in all, Bitcoin's in a really bullish spot. And again, the reason why we talk about Bitcoin is because this is going to affect what we're going to say in terms of WIF and POPCAT. I believe that there is going to be a setup here. If not now, within the next 12 hours or at the time that this video is posted, this setup is going to be valid. Now, this setup in particular goes back to the video that I made last week on exactly what to look for when you're buying dips. By the way, if you guys haven't watched that video already, it's quite literally free alpha. I'm sharing the source on the exact dip buying framework that I use for most altcoins, especially during a bull market. In there, it's quite literally a 4-step simple framework that anybody could follow. It's out there for free. All you have to do is watch it, but I recommend watching that after this video. So as part of that framework, first of all is to never catch falling knives. Second of all, you want to wait for some kind of range formation. Third of all, you want to either wait for a breakout or a liquidity sweep at the lows. And in this case, Solana did indeed get the range breakout. Currently, it's retracing back into some kind of value area. So this is an example of that range trading framework. Coming back to POPCAT, this is also a range trade. So instead of catching a falling knife and just placing limit orders at all of these lines right here, even though they're supposed to be, strong support, you can see that sometimes it doesn't always work. So here you obviously failed, here you obviously failed, and in this case you would have been in the red for a couple of weeks before price eventually bounced, and in this case you would still be red. Now if you're a really good trader and you manage to catch the bottom, then well, congratulations, but that happens 1 in every 10 times. All the other times you get burned, which is why we wait for the volatility to die down, wait for a range to form, and then we trade range. Now first of all, you can see that POPCAT did try to break above the range, but currently it failed, accepted back into the range, now is at range lows and is looking to sweep liquidity. Now this is a golden opportunity for us, because we understand that below every range low as well as every swing low, so this is your swing low and this is your range low, just lies a lot of liquidity. And this, by the way, is an example of how a range deviation looks like. If you fail to break out at the range high, well, guess where you go to next? Well, right now we're about to fail, or rather deviate below the range low, so you can only guess where things are going to go next. This is one of my favorite setups in all of crypto. In fact, this is my favorite setup in all of trading, because the liquidity sweep / range deviation plays on a lot of key psychological concepts. The first of which, the price starts breaking down beneath quote-unquote strong support at the range low / this previous support resistance line. What a lot of people are going to start thinking about is, oh, I'm going to short the breakdown, right? Price has broken beneath support, so they're going to start shorting here, which is obviously a really bad idea because, well, ideally you want to be selling high instead of selling low. When it's this low, you ideally want to look to buy, right? Buy low, sell high. It's really common sense, but common sense tends to not be so common, especially in crypto or trading. So what happens here is that fear is usually very high because price is breaking down, everyone's concerned, people are getting liquidated. Anybody who set their stop loss underneath this level are going to get stopped out, which also means that they're selling low. And this represents a perfect opportunity for you, an informed trader, to swoop in and take advantage of the moment that everyone's getting stopped out to buy at a really great price, to ride it all the way to the other side. It's the same thing that happened with all of these breakout traders, thinking that, oh, price is breaking out, there's a market structure break, and it is, don't get me wrong. But at the same time, you also risk getting into a false breakout, which happened in this case. False breakout, everyone went long here, get trapped, boom, price dumps, everyone up here is liquidated because they bought high and sold low. This tends to be what happens if you're not properly informed on what you should be doing in the markets. And so right now, this opportunity is about to present itself on POPCAT alongside one two liquidity levels that are very close to each other. Now, the third one is going to be all the way back down here, so I don't think that POPCAT's going to hit this level. If it does, then that's honestly going to be really concerning. What I'm expecting to happen is just like what happened with this range deviation, look for some kind of deviation beneath this low at 0.65. So anything below 0.65 to like 0.6 is going to be an ideal level for you to buy. In fact, if we were to draw this order block and extrapolate it outwards, this is one of the first areas of support that you're going to be, seeing in terms of POPCAT. And also, there is a fair value gap right at 0.64. So when price, no, not 0.64, 0.6, like 0.637. I'm going to just draw that out with a horizontal line at the start of this order block. That's going to be an area that we can look to snipe POPCAT, just like the area that I predicted for Bitcoin. Now, this is a tiny level. I get it. But at the same time, this is still a valid fair value gap going right into some kind of order block. If we go onto the 4-hourly chart, we can zoom in much closer on this. This, by the way, is some kind of value area where we see that there is a lot of volume being transacted within this area. And so this just puts further support onto our theory that, at least on the daily chart, all we can see is an order block, but here you have a lot of trading volume that will support the theory that this area will hold as a really strong support. And the reason that makes this different than just using any old support resistance and just using any old fair value gap is, first of all, this is occurring, like, again, whatever source that I'm about to share here, I mentioned it in that range, rather the dip buying framework. It's literally the exact step-by-step dip buying framework that I use to like 3x to 5x my account after every dip. It occurs about 2, 3, maybe 4 times a year, and that's just free money every 3 months. So taking a look at this, going back to what makes this one different is, first of all, you have fallen under almost a 70% retracement, which is a really good sign because that means the majority of people would have been shaken out at this point. Second of all, we want to be buying cheaply. We don't want to be buying something that is, 10 times the market cap of what it was just a year ago. Ideally, we want to be buying somewhere closer to just a 2 to 3x to what it was a year ago. Now, thirdly, this is lining up with some kind of a liquidity sweep. Over here, you have a low, over here you have a low. These two lows are in a relatively similar area, which makes them relatively equal lows. We understand from most retail trading concepts as well as smart money trading concepts that relatively equal lows makes people believe that this is going to be, really strong support. Again, what happens when people think that is stop loss is going to be underneath this low, which means it's going to be, a magnet for price to go to, essentially, because if price hits this area, a lot of people are going to be stopped out, and that's ultimately what the market makers want. We can pair this with another further confluence that we have a range here. Now, beautiful thing about ranges is that deviations represent some of the best opportunities for you in crypto, as well as in trading in general. If you can see a range, if you see some kind of deviation, it's usually a good place to either short or buy. So that's the fourth confluence factor. Fifth is that right underneath these liquidity levels, you have a daily fair value gap. Again, right under. This is an imbalance in the market that has yet to be filled all the way from, let's see here, 12th of September 2024. So for the past 3 months, this has yet to be filled. And fourth, right underneath here, you have, even though this does not look like much, there's just a bit of trading volume to support the fact that if price were to wick underneath the fair value gap, it's probably just going to wick into this value area and it's going to bounce right out of here, right? So this is currently the setup where we have 1, 2, 3, 4. Let's not count 5, but 4 confluence factors. Now, although I say that this is going to be likely a high probability trade with multiple confluence factors, there's always still the risk that I am completely wrong. Just like how if you in poker manage to get pocket aces, which is one of the best, statistically best hands that you can possibly get in poker, it doesn't automatically guarantee that you're going to win. But the thing that we can control and the thing that we can do to the best of our abilities is to pick and choose the hands that we do choose to play. If you get a pocket ace, well, guess what? Go aggressive. Statistically, it's in your favor. But if you happen to get 2s and 3s, well, chances are you probably shouldn't play that hand because even the best outcome is unlikely to beat a pocket ace, for example, if somebody else has it. Again, it's just thinking in terms of probabilities here. Like right now, this trade does seem like it is a high probability play. Of course, there's always going to be the risk that this fails, and that's just the risk, or rather, that's just the game that we play as traders. That's completely fine. We have to accept that. So going back to WIF, this is also a very, very similar setup. So currently you have some kind of range forming here. Price tried to break out of the range, or so-called, this is the deviation. And because this is a deviation, again, you're coming down into the range low, which is going to be another deviation, which is going to represent an opportunity for you to get into WIF. Ideally, you're going to be sweeping both of these liquidity points here because this is relatively equal lows. These are lows that have not yet been taken out. So in the event that you sweep underneath these lows, boom, that's going to be a range deviation. Again, money and that's going to be the play for you. And just looking back at WIF, price already is within this order block right here. So not going to use it as, some very high, confluence, factor area, but we do have a volume area that has yet to be filled. So if we take a look at the volume profile, it's going to be much clearer. Take a look at the last 500 12-hourly candles. You can see that quite literally, the most volume is transacted within this block. That's your value area high, that's your value area low. In fact, the low is already too low. So let's draw it like that. Value area high, put it down here, and boom. There you have the highest volume of transactions in the last 500 12-hourly candles. This, again, if you deviate, sweep these lows, boom, come into quite literally the area with the highest level of support. Boom, you're stacking multiple confluences on top of each other, and that's going to be an opportunity. And this is probably going to be one of those trades that, if it plays out, which again, the probabilities is in our favor, but it's not 100%. But I do say that this is considered at least an A-class setup. This is also going to be one of those trades that if you take and you hold for just 2 to 3 months, when WIF breaks the new all-time high, then range deviation leads to aggressive move, blah, 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 breaks the previous all-time high, goes to $10. People are gonna, anybody that holds this trade is gonna be one of those guys that gets to brag like, hey, look at me, I'm a genius, I caught the bottom. When in reality, you're just playing the setups as part of the 4-part dip buying framework that you should watch right after this. All you really did is follow the 4-part trading framework that I'm sharing in this video, which you can watch right here.